The U.S. death toll in Afghanistan continues to rise. The military today reported another American was killed by insurgents, bringing the count for July to 59. In nearly a decade of war in Afghanistan and Iraq, 5,620 Americans have died. Survivors of these fallen heroes are entitled to a life insurance payment, and the government uses a private company to handle it. But what happened to the mother of 24-year-old Ryan Bowman of Great Mills, Maryland, could serve as a lesson to every military family.
Ryan was a neat kid. He really wanted to join the Army after 9/11 because he saw that there were things that he could do.
Sergeant Ryan Bowman was as proud of his mission as his mother is of him. A soldier with the 101st Airborne, he was stationed in eastern Afghanistan, protecting villagers from the Taliban and providing critical services like repairing pumps, supplying water.
One of the things that he said was that if anything happens to me, just let the world know we're making a difference over here.
But on August 1st, 2008, Ryan was riding in a Humvee when he spotted an IED.
He saw the IED. He told his driver go left, and that placed the IED directly under him.
The 24-year-old soldier was killed instantly. The driver, gunner, and medic with him all survived. So in some ways, Ryan really was a hero that day.
Yes.
And sacrificed his own life to save the other people who were with him.
Yes.
Does that sound like Ryan?
Absolutely.
Life without her son was hard to accept until a casualty assistance officer asked her to choose how she would like to receive his death benefits.
I handed the paperwork back to the poor casualty assistance officer and said, I don't want it. And he was very patient and explained that it wasn't an option and that really I had to accept it and I had to decide what to do.
She eventually filed, electing a lump sum of $400,000. But the check never came. Instead, she received a checkbook and a packet from Prudential saying the money had been placed in its Alliance account, where it was available immediately and would begin earning interest right away.
You can use the drafts to access anytime you wish.
Everything seemed fine until she tried using the checks.
And I was told that the check could not be verified.
When did you realize this was a different kind of checking account?
Sad to say, it wasn't until the journalist contacted me.
The journalist was David Evans, an award-winning senior writer with Bloomberg Markets magazine.
The life insurance company is holding on to their money, and that bothers some people once they find out.
Evans' 6-month investigative report, appearing today in the magazine's September issue, reveals that Cindy Lohman's money was being held in Prudential's general corporate account, accruing interest, most of it for the insurance giant.
They're able to create quite a float for themselves, and they're able to earn the difference between the small interest rate that they pay to the survivors and the larger rate that they're able to make by keeping this money in their corporate investment account.
In fact, in 2008, when Cindy Lohman's statement said she was earning less than 1% interest on her Alliance account, regulatory filings show Prudential was earning almost 5% on its corporate account.
They figured out a way to create these retained asset accounts. They figured out a way to hold on to that money and actually turn death into a profit center.
Evans says the practice of pooling and profiting from death benefits is surprisingly common and extends well beyond the military.
We were able to determine that there's $28 billion in 1 million accounts at more than 120 insurance companies across the U.S.
And while Prudential's packet boasts words like control and security in big, bold letters, you'd have to read the fine print to find out that Alliance accounts are not insured by the FDIC.
They're increasing their profits on all of our children's death benefits. It's sad, and doing it in a way that puts the money at risk.
Chairman Filner and members of the committee.
They may be turning profits, but at least one veterans advocate says any insurance company doing this is morally bankrupt.
This is wrong. This is outrageous that a large insurance company is taking advantage of families at the very time that the American public expects that they be provided everything that they need.
Outrageous, perhaps, but is it legal?
It doesn't appear to be criminally unlawful, but it's likely to be civilly unlawful and raises some difficult regulatory boundary questions.
In a statement to CBS News, Prudential said today, "We fully disclose the nature and terms of the account to account holders, including the interest credited to their account. We also make it clear to beneficiaries that they can withdraw some or all of the money immediately or at any time and without delay. The interest rate paid to account holders has been comparable to other on-demand accounts." The Department of Veterans Affairs told us it is deeply concerned and is conducting a full investigation of the life insurance companies and their procedures. Meanwhile, Cindy Lohman says she closed her Alliance account on July 8th and is still waiting to receive the balance. Whenever the money comes, it will be little consolation for a family that has already paid the highest price.
It's hard to lose him. There's not a day that goes by that you don't think about that loss.
Also in its statement to us today, Prudential said, quote, "While we have had years where we have made a profit, we have also had years when we had losses because we assumed the investment risk for the money in the Alliance account." For the full article from Bloomberg Markets Magazine, you can go to cbsnews.com.